The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. We got action this morning. CPI numbers, we got hot inflation, and the market a little worried. We trade to red territory, and there's a drop for you. How about the NASDAQ 100? 350 points, boom, just like that, from 21,850. Right now, you're negative by 1.25% in the NASDAQ 100, off 270 points, 21,516. S&Ps, we drop almost right to where we were last Sunday night. Excuse me, futures open 6,011. You just had the S&Ps drop almost 80 points. Boom, down 1.1%. Trading down to 6,023, or off about 70 points. Dow off about a full percentage point, off 434 points at 44,274. And how about the Russell? Off by 1.7%, off 40 points at 2244. Crude, negative by about $1 on the session, trading at 72.23. Gold contract right now trading. And yeah, we see a little bit of volatility on that 830 number for gold. We're trading at 29.10. Now, gold was already negative in the overnight session. We spike to 29.68, and that was on Monday night coming into yesterday, and we traded a little bit lower, right back to where we were on Friday for gold. Now, let's get into notes and bonds. What do we got? Lower price, higher yield, coming at you. 10-year. How does 4.64 sit? How does 4.64 sit, right? What were we talking about? We were talking about, okay, why is there no odds factored in for a hike, right? I'm jumping around, all right, but we're going to jump around on this show, man. We're talking to our man Teddy Kegstad at 40 past the hour. Always a great conversation. Today, we got some action to talk about for sure. But it is interesting as you go down the line on some of these meetings, right? There's no probability priced in that they would ever hike. Now, we're not there just yet. But, boy, you talk about some of these numbers, man, okay? CPI. Here, let's get to the headline first. Inflation tops forecast, dimming chances for Fed rate cuts. When are hikes going to come into the conversation? They're not there yet. And in my opinion, they at least should be priced in a little bit of an outlier. When you have inflation, we have unemployment at 4%, folks. Unemployment's at 4%, and you have the CPI going up 0.5 percentage point on a monthly basis. Now, yesterday we talked about that January CPI numbers are the hottest of almost all year, as you do get some yearly price resets. But nonetheless, the market knew that, and they were still looking for about a 0.3% rise. You come in at 0.5. On core, we come in at 0.4. Market was looking for 0.3. Year over year, we're at 3%. Market was expecting 2.9. And on core year over year, we're at 3.3. The market was expecting 3.1. Now, you break this down a little bit further. How about super core, right? Super core is core minus housing. Surged in January. That's not what the Fed wants to see, okay? Poised to erode pricing in Fed interest rate cuts further, yeah. Now, as I talked about, okay, the start of the year is a time when companies readjust pricing. So the hot print today suggests that. The market already knew this, okay? The market knew that January encompasses a hot CPI reading, and this is above every expectation. Core inflation came in at 0.4 for the third straight January is the number there. Away from services, inflation gains were pretty widespread. Core goods has picked up. I mean, everything's picking up, right? Absolutely remarkable that you have everything picking up. Whew. Yeah, 0.5% in January. You multiply that times 12, and you're at 6%. Now, January numbers are bigger than the rest of the year. But you can see, we're supposed to get back down to 2, okay? The dotted line is core. We're not going back to 2, folks. We've been stuck since June. It's February. That's 8 months. We've been stuck at 3.3%. Why is the Fed going to cut if we're stuck at core CPI at 3.3%? I think you got to wrap your brain around this one. Okay? There are no hikes possible in this market priced in right now. We have yields rising on the heels of this, but we have unemployment at 4.0% right now, and we have a market adjusting to the fact that, hey, guess what? Might be higher for longer, as we were thinking. But on the heels of Chairman Powell talking yesterday, and what did he say? They're in no rush at all. And if they're in no rush, and you have inflation data like this, we'll see where we go from there. But inflation actually picking back up. Think about that. Actually picking back up. We're not stuck. Things are heating back up, right? Yeah, we also have a treasury auction. How about $42 billion of 10-year notes? Get ready for that one on the heels of this, right? 10-year, rising, not surprisingly. Rents climbing 0.35% on the month, faster than December. Now, owner's equivalent rent is a big component of the CPI, not as big in PCE, which the Fed prefers. But yeah, this is going to be a good one, man. So what do we have? We have a hot CPI number. We have Chairman Powell going in front of the House today at 10 o'clock. Now, he's going to have to answer these questions having to do with this number that we got that they didn't have yesterday. And then we get the 10-year auction later today as well. Yeah. Yeah, look at super core services. This is what I want to get down to. We're at 4%. This is core minus housing. 4%. We're supposed to go back to 2. It's not even close. And that takes housing out of the equation, which has been a persistent thorn. Yeah, remember when they cut by 50 basis points in September? What was going on there? All right. It's going to be an interesting one, to say the least. The 10-year. Yeah, sitting right at the lows right now, and we're talking about a 10-year yield sitting at 4.64%. And maybe the conversation starts to shift that, you know what, maybe we are heading back to 5%, man. That was the number when we were talking about it down here, and quite a reversal. We were just at 110, boom, just like that. We give up 2 full points in the 10-year right now. We jump over to the 2-year. Look at this, the 2-year, right back to where we were, the lows of November. We check out the dollar index this morning. And that's a spike for you, man. We got higher yields, we got dollar strength, and yeah, that's going to be weighing on gold a bit. Gold just off of the highs, but we're sitting at 108.34 right now in the dollar. We got yields at the 10-year sitting at 4.65%, and we got Chairman Powell dealing with a number where you have prices rising. Imagine that, right? From December to January, prices went up 0.5 percentage point, folks, for the consumer price index. Now, there's a lot that goes into that, right? Housing's a huge component. Owner's equivalent rent, a huge component. What I'm going to look at when we get back, I've brought it up many times before, but I'm going to take a look at what CPI is versus what the PCE is, which is what the Fed prefers, okay? You'll see a little difference, but the kicker here is if core CPI is rising, that takes housing out of the equation. Wait till you see how big housing is in CPI. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got the S&P negative by 65, NASDAQ 100 off by 248. We got a hot inflation print on the CPI number. And yeah, we've all become somewhat familiar. But when you talk about the PCE versus the CPI, this is all you got to look at, folks, okay? And all I do, if you want to find this, all right, I'll post this in the Tiger's Den. If you haven't joined the Tiger's Den, folks, go check it out. It's $1 for the year. We really just use that to verify everybody's information. We keep the riffraff out. But look at housing, okay? CPI, housing in the yellow, 32%. In the PCE, it's only 15%. But the reason why I bring it up is because food is in the purple. Housing is in the yellow, okay? Energy is over here in this green section right here. If you take out food and energy, that's core. You take out housing, that's super core, okay? The point being, now you see healthcare is a much bigger component of PCE, okay? So that's why you always want to watch the healthcare numbers in CPI because they're going to translate more over to the PCE that the Fed prefers, right? That's the biggest differences. The biggest difference is housing and healthcare. That's it. You know, look at the others. Energy, a much bigger component of CPI, but you take that out for core, okay? Recreation on PCE is a slightly larger number. Financial is a much bigger number on PCE. Why is that, folks? Because you're paying a lot of fees that you're not even paying yourself, right? The greatest difference between PCE and CPI is personal consumption expenditure is goods that you consume that you might not be paying for yourself. The greatest example of that is employer-based healthcare. You are a consumer of employer-based healthcare, but you're not the one actually paying for it, right? Your company's paying for it, you're consuming it, but it all matters, which is why the PCE factors that in at 21%, even though 9% is the number for CPI, because a lot of us don't pay for our healthcare. It's factored into the cost of employment. But guess what? Your company's paying for that. That's part of their cost. It translates down the line. But nonetheless, super core CPI heating up to the hottest number you've seen in a year. And guess what? That's going to translate over to PCE, because super core CPI, takes out housing, food, and energy. Okay, healthcare is still a big difference, but beyond that, it's a lot of components in the PCE core as well. Core PCE is what the Fed prefers. Period. End of sentence. So we'll see where we go from there. But yeah, it's a big number, man. And yeah, great question over in the YouTube den, talking about stagflation. Is it possible? You know, it's possible, but we don't have anything like that right now, man. What we have right now is we have a hot economy that's dealing with inflation. That's what we have. This economy's on fire. It's on fire so much so that we have inflation that can't go away. Okay? That's the problem. When you talk about unemployment at 4%, right? GDP growth, job growth, productivity, margins, AI, all that stuff on fire. But guess what? That's inflationary. That's it. Now, at the same time, you have Trump tweeting out on Truth Social. This is where, right before, literally, like a half hour before those numbers came out, interest rates should be lowered. Something which would go hand in hand with upcoming tariffs. Let's rock and roll. Folks, you lower interest rates and you add taxes on imports, which is what tariffs are. Okay, we should just call them taxes on imports. Okay, that's great. They do the same thing, but they are taxes on imports. Okay, if you tax imports and you lower interest rates, what do you think is going to happen? Every time you hear the word tariff, okay, and this is not political. This is trading. This is profits, okay? Every time you hear the word tariffs, say to yourself, taxes on imports, and just remember that when we have the inflation conversation, because it is going to persist. Now, you saw, the Treasury and the new Treasury Secretary talking about focus on the 10-year. Well, we got a 10-year auction today. Keep your eye on that number, okay, and see how that goes, because that's going to be an interesting one. We'll see where we go from there. But it's, things seem like they're playing out okay right now. We're going to see how they play out, man, because the battle is on, and we got unemployment at 4%, and we have a Fed that, they believe they've lowered interest rates a percentage point, okay? They believe that they're far less restrictive right now than they were previously. The last thing that they should be worried about is clamping down on this economy when you have inflation running hot. And I wonder when that risk profile is going to change, right? As in, when's the risk profile going to shift if these numbers persist on a hot inflation number? Now, Trump's out there calling it Biden inflation up. He probably knew this number. I don't know if he knew this number, but interesting that he's tweeting interest rates should be lowered right before we got a hot inflation number, okay? But this is what's going to happen. And he's only going to be able to call it Biden inflation for so long as you're going to have time persists, and we'll see where it goes. But that battle is going to persist, man, because what do we have again? We have rates going up, okay? We got rates going up. We got the market going down. And, folks, read that one again, okay? He's the president. I'm hoping for the best right now. Interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. You know what? That would be great for stock prices. Here's the kicker, right? Walk through this. Do you know why that would be great? Okay, let's do it, man. Let's lower the interest rate. Let's have the Fed drop the interest rate 200 basis points overnight. Okay, and let's ratchet up the tariffs across the board. 25% on everything, 60% on China. Anything that comes into the country, excuse me, can't help myself, right? You have to exacerbate it and roll it around, because I'm just wondering where it plays out in the future. Okay, it's going to be a battle, and we're seeing the volatility play out. Now, I don't think that Trump's going to play out to a 7, 8, 9% inflation number, right? But it is interesting what would happen to stocks. Do you know what would happen to stocks? Stock will go through the roof. Do you know why stocks will go through the roof? Because the dollar would be worth less because you have inflation, right? You lower interest rates, you jack up tariffs. The market might love that in the short term, because what if it causes inflation? You know what happens? If it causes inflation, the dollar's worth less. If the dollar's worth less for buying power, then guess what? Yeah, stock prices are going to go up, but they're going to have the same exact buying power in an economy where there's inflation. So it's just interesting to wrap your brain around all the moving parts right now. But man, we got a market for the open, folks. We got the S&Ps down by 60 points. We got the NASDAQ 100 down by 226, Dow off 386. Markets bouncing a bit from the lows, but boy, it's going to be an interesting open. We jump over to the dollar. We back off from 108.52 to 108.30 right now. We jump over to that gold contract. Gold trading at, look at that, 29.21. Market's reverberating a bit. The first move is not always the move that carries, but it is so far in yields. Yields with the 10-year sitting at 4.65. Stay tuned, folks. We're coming right back for the open.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets lower right now, and I think this is what you're seeing here in terms of there's a lot of risk to the downside in this market, right? If you look at the CPI print, was there a possibility that the market trades up 1 to 2% on that CPI number? I don't know. I mean, it's always possible, right? But man, you'd have to get a pretty low number for CPI to really take the possibility of inflation out of the conversation for this market to accelerate higher. And I just don't see that happening right now. I really see the risks that this market at 6,100, with the one run we've had, and with the optimism priced in right now, that you got a little bit of volatility and variables down the line. I mean, you got the president calling for lower interest rates and taxes on imports at the same time that you have monthly inflation at 0.5%. You better realize that there are some risks out there in this market. All right, we got earnings season going on in the midst of all this macroeconomic data. And how about CVS now? You take a look at that chart on a longer-term basis, all right? Be careful, all right? But, yeah, we're catching a little bit of a bounce in CVS, up more than 10%. You pull over their numbers. Big earnings beat is how they put it. And, yeah, they upped the guidance as well. How about $1.19 versus 93 cents? Revenue, they beat as well. And, yeah, they got a $2 billion cost cut going on. Net income, $1.64 billion. Look at that. The insurance unit, $32.96 billion in revenue, up more than 23% from just last year. And that's what the market was looking for, but they delivered. Yeah, so they're in the midst of a turnaround, and boy, you're up by 50% from where we were trading just at the beginning of the year. Now, you're bumping into some headwinds here on CVS, right? Look where we are. We're in this area that we consolidated in for the better part of 8 months. From when we dropped off 9 months ago in May, you chopped around to basically where we are right now. And you got a huge gap out there from where we were April earnings, let alone where we were about a year ago, up at $80. You're still trading at 61. So you're going to have some work to do to climb that wall of worry, as you got a lot of investors. I mean, how far back do you got to go, right? You got a lot of investors that are in this equity in a loss. The only people in this equity with a gain have been in here since December. Everybody else in this equity is basically sitting in a loss on CVS. But decent numbers, and you're trading higher again. You're just keeping higher. Look at that pop. All right, let's check out some of the Magnificent Seven as we kick things off. So Apple, quite the surge higher yesterday. They give it back today a bit, off $1.49. You're at $2.31 right now. You jump over to Microsoft shares, down about 1.1%. Amazon shares down 1.3% so far. Meta with some volatility, down about 0.5%. Tesla shares up by 1.1%. Be careful of that one, though. Elon's got bigger plans than Tesla right now, folks. He really does. You know, whether he's talking about OpenAI, he's talking about, he's got a lot of plans. Any other CEO would be taking it on the chin. If you're trading from 488 to 330 and he's talking about buying separate companies, think about it, right? Now, yeah, you had the run up following the election, okay? But we're at 330, folks. This equity was at 260 in September. You were just at 488. Remarkable pullback, and we're approaching the 618 of that pullback, which will put you at about 316. We already traded down to 325 for Tesla shares. You talk about it. Volatility. Nvidia down about 1.7% with the market right now. We jump over to Netflix shares, still above 1,000, trading down about 0.6% as well. All right, let me jump over to others. How about Supermicro out with their numbers last night? A little bit of a scare when they first come out with them, down to 32, up to 44. The market's selling it off a bit, up $1.93, up by 5%, but you see the volatility on their numbers there. Now, they're out with their numbers, okay? The headline there is they're confident it's going to meet the SEC deadline to reach $40 billion in revenue by the next fiscal year, okay? That's what they're talking about. And reach $40 billion, excuse me. They have an SEC deadline by February 25th, okay? And then they're confident they're going to reach $40 billion in revenue in fiscal 2026. What do I always talk about? When you got a company like this, all right, listen, you want big volatility, you want big risk, big rewards, yeah, you're going to get it. What do you got it? You know, there's nothing like volatility when the market can't figure out whether to trust the numbers that a public company is pushing out, folks. That's volatility for you. So yeah, you're going to get some volatility, okay? But like when we talked about with Elon a while back, when you start talking about a company that can't even confirm their annual report that's due in 13 days, and you're gonna push things out to what they're talking about fiscal 2026, be careful in these numbers, folks, okay? It expects revenue of 23.5 to 25 for fiscal 2025, down from 26 to 30. Right? Careful of the story they're telling, and if you're the buyer here, because I'd be very skeptical. I think there's plenty of other equities right now in this market where you still have vast amounts of volatility in those plays, and you're just not risking the type of risk that you have going on that front. Yeah, how about Zelle? Now, I use Zelle all the time. I do. $1 trillion in volumes last year. Just remarkable. Most ever for a peer-to-peer platform. User base jumped 12% to 151 million accounts last year. Total dollars jumped 27%. So they're adding people, but they're adding transactions at a higher level than that. And yeah, between Zelle and Venmo, those are the two that I use most. It's pretty remarkable. Only launched in 2017, right? Yeah. Yeah, allows for instant money transfers made within the apps of thousands of member institutions. It's a brilliant idea. You just cut right to it, man. Yeah. So Zelle, payments network run by bank-owned early warning services. But guess what? It's owned by 7 of the biggest U.S. banks. That's all you had to do, man. You can facilitate those transactions. That's it. And I do it. I have people paying rent in Zelle and Venmo. Those are the two. They pay me rent. My tenants, what my dad had going on, Zelle and Venmo. That's the deal, man. That's how they get paid. Now, PayPal's in there too, okay? PayPal's at $400 billion. You better believe they're a player. But Zelle and Venmo, and it's not a coincidence. They're the deal. Yeah, there you go. Zelle, right, EKS? Zelle and Venmo, man. Between those two, they can basically facilitate everything, in my opinion. I don't even think I use PayPal. I don't. Which is remarkable when you think about that. They're late to the party, but all they needed was the connections. Sometimes it's who you know. And yeah, they know all the big banks, and that's what matters. All right, markets clawing back some of those losses. We're still down by not even 0.9% now in the NASDAQ 100. S&P's off by 0.9 as well. Dow just off 1% right now, and the Russell leading the way, off by 1.4%. The Russell most susceptible to those longer, to those rates, as their duration is shorter term on their debt. So when rates rise, they're exposed to it. All right, folks, we're coming back. We're talking with our man Teddy Cakestad. Great day to talk some currencies, commodities. Come on back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by 52, NASDAQ 100 off by 152, but we got a little bit of a bid. You got the NASDAQ 100 up by almost 100 points from where we were on the open. We got yields rising on a hot inflation number, and it seems like it's always the case. We talked to our man Teddy Kegstad on Wednesdays. We get some economic data on Wednesdays. We get Fed Day on Wednesdays sometimes. Folks, if you haven't checked out the Tiger Forex report, with everything going on in the markets, you're seeing what's going on today. Yields, right? The dollar, markets, it's all related. Check out the Tiger Forex report. Weekly updates every Monday, updates throughout the week when warranted. You get a 30-day money-back guarantee. And don't forget, folks, you got some time at night on the weekends. You're looking for a great education? Head on over to the services tab. Check out a couple of the webinars Teddy's put together. Capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. 2 outstanding webinars, only $97, folks. You gain access to the archive when you sign up. You can watch it as many times as you want. And Teddy Kegstad, we got a market this morning. Good morning.
Good morning.
So it seems like I always say, man, Teddy, it's wild. Where do we go? Where do we kick things off? But let's kick it off with inflation, man. You've been talking about, we were talking last week. Tough to see the Fed maybe doing anything in the near term, almost a little bit tougher. We got a hot inflation print. What do you think of this market, man?
Well, I think that there was a guy who comes on your show around this same time on Wednesdays a few months ago saying that this is exactly how the economic numbers were going to be looking.
We got to get that guy back on. Where is he? Let's get him on right now. Al, get him on. All right, he's here. Go ahead. Totally, man.
But no, we're going to see this until the fall. These numbers are not going to slide until the fall. I remember I said that unless the Fed wants to do some kind of a kickstart, they're not going to cut rates for a while. And the numbers are going to be inflationary at least until probably July or August. We're not going to start to see a retraction in inflation numbers until the fall. Now, where you will see it is probably especially in your mid-cap stocks as far as earnings. You'll see it there first. If earnings will be strong before inflationary numbers start to come down. And then it'll also spur even better earnings afterwards. So I think that's what you're going to see as far as equities. You're going to see from the midsummer, definitely going into the fourth quarter of this year, that earnings will accelerate, which will be strong for the market. And that's when we'll start to see the retraction in all these numbers. We will not see CPI come down at least until, like I'm telling you, until the summertime. That's just the way it is. They're all lagging numbers, and we're dealing with all of the impact of the last, especially 6 months. Since the summertime, it doesn't take a rocket scientist to say that there's inflation. Everyone knows it when they go to the store. Everything has gone up in price. Even restaurants, it's ridiculous. So, it is what it is. So I mean, we'll be dealing with that until then. It's just,
I talk about it all the time, just anecdotally, but everything is anecdotal. You got enough anecdotes, and it kind of encompasses a big enough sample size. But one thing that always blows me away right now, Teddy, is the 20-ounce bottles of soda at checkout at Publix down here. I think they're $2.69, and it blows my mind because how is a gallon of gas outside almost $3, and you're telling me a 20-ounce bottle of Impulse Buy a soda is $2.70, man?
Right.
I'm old enough that, folks, those used to be 99 cents at checkout. You're talking about $2.69, Teddy. My goodness, right? But it's we see it all, man. Sugar water for $2.70. My God.
Absolutely.
But demonstrative.
A little thing of Tic Tacs costs now $2-3.
It's everything used to be what? Candy bars used to be 50 cents, right? About all that, and I'm going back, folks. I get it, but yeah, it's here, man. It's real, and we got unemployment at 4%. So what are we talking about, man? Right? It's like we got unemployment at 4%. GDP is a strong number, and we got inflation that's persisting. So I agree. We're gonna wait a little bit. Let's get into some of the currencies, man. You do such a great job walking us through, and folks, go check out the Tiger Forex report. Teddy, he's been on the ball, man. This is great, and let's go through it. So dollar spikes to 108.52, and it kind of is the theme we've been talking about, Teddy. You've been putting these numbers out here, so I don't imagine a huge shift of what we talked about even last week. But what do you think about the dollar sitting 108.30?
Well, I like it. I think that the dollar index still is going to be a bad gauge as far as the broad basket of currencies out there. But right now, especially, you can see like the U.S. dollar yen, we have a balloon underwater rally with this number. So it's very reactionary because the U.S. dollar yen is very yield sensitive right now. So, and the fact that there's no sign of a cut coming. I mean, Powell came out yesterday and say there's no sign of a cut coming for a while. So, yeah. I mean, and now you have, especially with a CPI number like this, I still think that the U.S. dollar yen can get to that 150 target or lower, but not with this environment. I mean, not if we have another month of economic numbers like this, like that means we may have a short-term low in the U.S. dollar yen that was set up, back last week on Friday. So.
Pretty remarkable, man. I agree. I mean, it's why we have a lot of recency bias. I talked about this when you go back to 0% interest rates for so long, and recency. I'm talking about 20 years, right? Almost just 15, 20 years. And if we didn't have that, I feel like everybody wouldn't be in such a rush to say why aren't we cutting rates? Because right now it's like 4% unemployment. You keep harping on it, but man, there's no reason why they should be in a rush in this market. Seems like the equities are doing just fine with a 10% 10-year yield at 4.65%. But I love how you break down those individual currencies that go into it. Dollar, yen, man, and you're seeing the reaction on gold. What do you think about gold? Because we got a lot of gold bugs, man. Can't help but talk about gold. I know it's not necessarily a currency, but boy, you break down in terms of how this thing trades, and just remarkable strength in this gold contract, even in the face of a dollar that's been holding up at 108 for some time now.
Well, I'll tell you what. Let me pull up.
Throw me a curveball with gold, but man, we got a lot of gold bugs, and it's everywhere right now.
I can always do it on the fly. It's no big deal for me. All right. Well, you have a nice little spike high yesterday in gold. Obviously, the trend is really solid. I like gold. I think you got to be basically a buy break kind of scenario right now for the market. Could it pull back? Yeah, I can get back to $2,800, but I think especially with what's going on with yields and stuff like that, and with the dollar, you probably could still see that gold could probably push up to that $2,960 to even put short of $3,000.
Yeah.
So that's not really out of the realm of possibility with the current market right now, especially with the number like we had today. So if that gets reinforced and you see the bonds, especially if yields start to push back towards the highs of what they were at, just a couple months ago, why wouldn't gold put pressure of the highs? Now, I'd be very careful being long at these levels. You can see it. Believe me, when there's a reason to sell off, I mean, how they go in is how they come out. This slope is very vertical. So the slightest thing that can reverse the momentum, you could have like a huge sell-off very quickly over the course of 1 or 2 days. So you got to keep your stops pretty tight on this trend.
I like it. I've been talking about just in general in this market, I'm trying to keep my stops tight because we got moves everywhere, man. Today's a demonstration of it, right? It's like, boom, we're down. Now the Nasdaq's only down 100 points. Just massive moves across the board. Euro, US dollar, we still heading back to parity? We're at 103.44. What do you think?
I think so. I think no matter what, we are, especially right now with yields being firm Absolutely. Yeah. I think the parity is definitely, I think it's going to happen within the next couple of months. So especially if there's any, more bad news as far as the economy in Europe and Germany, going south, baby, going down.
All right, folks, check out that Tiger Forex report. Check out those couple great webinars Teddy's got under the services tab. Teddy, appreciate the update as always, man. Have a great week. We look forward to talking to you next Wednesday as always.
Thanks, Tommy. See you next week.
Thank you. Folks, we'll be right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 39 points, but you see the climb there. We're up by about 35 from that low we had at 9 a.m. this morning, clawing back some of those losses. NASDAQ 100. Now, you're talking about almost 200 points. We make a low of about 21,507. We just hit 21,700. All right, when you're talking about inflation, man, well, check this number out, man. Private school tuition, $50,000. Now, this is talking about day schools, okay? And that is a remarkable number. And I was trying to find the sample size, the schools they're talking about. Day schools, an average. That is quite an average in terms of what you're talking about for day schools. Now, I was very fortunate, folks, to attend a school, Noble and Greenough School in Dedham, Mass. If you're looking for an outstanding school, folks, It changed my life for the better. I'm forever thankful to my dad for making sure that I went here, making sacrifices to make sure that I was able to go there. Now, at the time when I went there, I remember it was, I was fortunate to go there from middle school and high school. Check out the tuitions right now, man. Day tuition for this school, $62,000. I was so fortunate, folks, all right? If they do 5-day boarding at $68,000, okay? Now, there's a middle school in there as well that's slightly less. I'm getting down to it. But this is Nobles, okay? For this year, $7.3 million in aid, $47,907 per kid that was receiving it, and that works out to about 152 kids receiving aid with an average of $47,907. There's about 500 or 600 kids that attend the school. It's I just pulled it up. It's 500 in the upper class. Yeah, there it is. 550 in the upper class and 160 in the middle school, but they do have grade aid, which is nice to see there, but it is remarkable when you talk about inflation. But that's the middle school. The year I went, they had just built the middle school. So fortunate, folks. When you get to college, it's important as well, but I always say, by the time you're 18, you mature so much in the years from 12 to 18. If you're interested in a school, check it out. Nobles, Dedham, Mass. Founded in 1866. When I was there in 1997, they played the 100th football game versus Melton Academy. 1997, 100 football games. Crazy. Folks, thanks so much. Stay tuned for Basil. He's coming up next. Have a great Wednesday, everybody.